Welcome to this month's XPS investment update, keeping you informed of key developments and how they may affect your scheme. The Bank of England voted to cut interest rates by 25 basis points at the 31st of July meeting in a move widely expected after the UK Consumer Prices Index fell to 2% in May and remained there in June. Forecasts suggest that inflation is expected to rise later this year before slowing down again over the longer term. The effective interest rate on a 2-year UK government bond fell to its lowest level in over a year at the end of July, suggesting that the market is optimistic that interest rates look set to continue to fall. Meanwhile, the Federal Reserve voted to halt interest rates for the 8th meeting in a row, despite much debate at the Federal Open Market Committee meeting in July. The Fed now looks almost certain to implement a 25 basis point cut at its September meeting. In the UK, the Thames Water's debt was downgraded to sub-investment grade by S&P and Moody's, which is likely to accelerate a move towards a special administrative regime. A Labour election landslide was a boost for UK stocks over July, as investors warmed to hopes of political stability. Global equities also rose slightly, but were hindered by fears that the US could further tighten restrictions on exports of semiconductor equipment to China, which triggered a sell-off in tech stocks. Emerging markets were not immune to the tech sell-off as China's economic struggles returned to the headlines. In fixed income markets, both UK investment grade and global high-yield bonds were buoyed by expectations of imminent interest rate cuts by the UK and US central banks respectively. Aggregate UK DB pension scheme funding on a low-risk basis fell slightly over the month. Falling gilt yields saw liabilities grow by more than assets over July. Despite this, aggregate funding continues to remain very healthy overall. That's it for this month's update. For more information, please contact us.